Welcome to my second dividend portfolio update video. So for those who didn't watch the first video, I covered the first 12 months of investing in the portfolio. This video will cover the following 3 months from March to May. As I'm covering less time, I will go into slightly lower level of detail when talking about the individual transactions and decisions made. So I'm currently pound cost averaging £200 a week into 8 different stocks and ETFs. I will put up on screen now the breakdown of how the money is invested each week. This is essentially the base investments. I also make additional investments when opportunities arise that I will talk about in a moment. I do own about 50 different stocks in the portfolio, so there is plenty of action always happening. So the last 3 months have been interesting in the financial markets. The 10-year yields in America have been rising, making borrowing more expensive, hurting growth companies. This has caused capital to rotate out of growth company stocks, meaning my growth portfolio has taken a considerable beating and is down a fair amount. Crypto went up a lot and then rapidly fell in mid-May. But the diamond in the rough, which is this video's focus, has been dividend investing. Dividend investing is generally very predictable and reliable with the companies you invest in, and my portfolio has been going great, so let's get straight into it. The portfolio gets pretty interesting now after completing the first year, as I can now compare dividend payouts with the same month from last year. Each month I should receive a larger payout as all dividends are being reinvested and the companies should be growing their dividends each year. So March was a big month of investing, with me putting in £3,200. The bulk of this can be explained as in March I released a stock analysis video on Legal & General, where I claim that Legal & General is the best dividend stock currently available on the market, in my opinion. I will put a link in the description to the video in case you haven't seen it already. Of course, I put my money where my mouth is and I picked up around 700 shares of Legal & General for £2,000. This is how I operate on this channel. I say what I truly believe. If you like the honesty and transparency, then hit the like button for the YouTube algorithm. I always appreciate it. At the end of the month, I also snapped up 2 shares of Games Workshop Group for just under £196, with a forward yield of 2.1%. Games Workshop Group is a great company, most well known for their mini action figure game Warhammer. This company has a lot of potential to scale digitally and through licensing. It's an exciting company that I think I will do a stock analysis video on in the future, so I won't say any more on it. If there's any company you want me to analyse or any questions you have at all, let me know in the comment section as I respond to every single one. So, £19.21 received in dividends from March. This came in multiple smaller payments, nicely spread throughout the month, the largest of which was from Paragon Bank, a large provider of buy-to-let mortgages in the UK, so property investors often borrow from them. In April, it was back to just the regular base investment of £200 a week. It should be noted that after last month's heavy buying and also a lot of buying the dip for my growth portfolio, I am starting to run out of capital reserves. I'm a uni student, so I don't have an income currently. All my investments are funded using money saved from a few years of working before uni and the profits from a couple of very successful investments previously made. It was a big month of dividends though, with a new record set receiving £65. The majority of this came from the various ETFs that I hold in the portfolio, which pay every 3 months. The lion's share coming from the US Dividend Aristocrats ETF, a great ETF that captures all the US companies with an impeccable history of growing the dividend payout over the last 25 years. Now May, which is actually the month of my birthday, is where the dividends get crazy. Just the routine £200 a week invested, but a huge £175 received in dividend payments. Now obviously, this smashed all previous records. In my last video, I said that there would be a lot of companies restarting the dividend payment after suspending them in 2020 due to the uncertainties from the pandemic, and May saw a lot of this happening. I want to highlight the £14.53 dividend payment received from Lloyds Banking Group, one of the many companies that paid me its first dividend this May. I am very bullish long term that the Lloyds stock will perform very well and the dividend grow. The bank has been hit very hard by PPI over the last decade, costing the bank £22 billion. Just to put that into context, the bank's entire market capitalisation is £35 billion. Now PPI is basically over, Lloyds should have a lot more money to reinvest in productive new business and increase dividend payouts and share buybacks. But back to the other dividends, the big money payment came in a single dividend from Legal & General. My big investment in March literally paying dividends in the form of a £126 payment. I want to highlight that the portfolio received £221 in dividends in the first 12 months and then £260 alone in the last 3. This is great progress for the portfolio and is a good example of the dividend snowball effect. This is the analogy that as the snowball rolls down the mountain, it picks up more and more snow, becoming bigger. Just like the dividend payments become bigger as more shares are accumulated through dividend reinvestment and adding to the portfolio. In my last video, I spoke about having the dividends pay for your lunch while out at work. Well, in the 3 months of March to May, there were 62 working days. That leaves £4.20 for lunch for each of those days from the £260 received, significantly more than the £3 required for a Tesco meal deal. That brings my trailing 12-month daily passive income to £1.29. Still a long way off where it needs to be to cover all my expenses for me to reach financial independence, but this is very much a long-term goal, and so far I'd say I've had a great start. Just switching over to look at my overall portfolio now, most of my investments are deep in the profit, with only a few sitting at losses. I've had to change the losses away from being highlighted in red, as for some reason my screen recorder couldn't deal with the red background and black font, so it's now highlighted in orange. Now I have more time, as I finished this year's uni exams, I will be reanalyzing all the holdings in the portfolio, as most of them I have not looked at since before COVID. I'll go through any adjustments made based on this in my next video. So the selling of shares to buy shares of a more promising company. The portfolio is currently sat on a nice yield on investment of around 3.5%, which is pretty decent, and a profit of around £3,800. That brings the portfolio value to £25,460. It's nice having the portfolio up and in the green, but as a dividend investor, you actually prefer the stock prices to be down so that you can buy more shares with the dividend reinvestments. You only want the share price to be up when you come to sell, which, as the majority of my holdings are extremely long term, isn't anytime soon. That wraps up the video. Let me know in the comments if you enjoyed this style of video, highlighting particular transactions at a much lower level of detail. May your dividends grow high and the markets be in your favour.